Well guys, it's been a busy last couple weeks for Tesla stock. If you didn't hear, Cybertruck came out. Oh my gosh, it like broke the internet, okay? Just a couple days ago, we got news that Model Y looks to be coming sooner than expected. And then here just an hour ago, a top Tesla analyst raised his bull case for the stock to $500 or about 50% higher from here. And let me just say, when I saw that headline, I thought it was a little strange, okay? This was a CNBC article. We know CNBC tends to be negative. Tesla, we've talked about that before. And just the wording, it seemed to be too positive. I mean, a top Tesla analyst raises bull case, stock going to $500, and I was just thinking, wow, that seems too positive. There's got to be a trick here, and we found the trick a little later on, okay? But normally, under most circumstances, when an analyst says their price target for a stock, usually that means like it's a 12-month price target. So if they say, let's say it's Apple stock, okay? Apple stock probably trades around $250 a share or something like that. If somebody say, we're putting a price target on Apple stock for $300 a share. That essentially means usually under most circumstances, they believe Apple stock would be going to $300 over the course of the next 12 months. That's usually how it works, okay? And if you don't already know, Tesla shares right now here today are about $330 a share. And also, if you didn't already know, Tesla's had an amazing past 6 months. Like this stock went from under $200 a share to now it's trading about $330, which is absolutely phenomenal performance. And as long as you already got your Tesla position built, like you're definitely very thrilled with that. The only people that would probably be mad at that is like Tesla short sellers and maybe analysts that are negative on Tesla stock. Outside of that, like you should be very happy. And so needless to say, $330, that's where Tesla stock's at today. $500, that's a big move up here, okay? So you got to be really bullish around Tesla stock. And what I want to find with this analyst is I'm not sure they're even bullish at all around this stock. Let's go ahead and look at what they actually say. By the way, smash the thumbs up button if you are a Tesla shareholder out there, and let me know how many shares of Tesla you actually own, as well as your cost basis, and make sure you share this video with somebody that owns Tesla stock, okay? Morgan Stanley increased its quote bull case, okay, this is already getting weird, for Tesla to $500 a share on Thursday in the firm's calculation of a best case scenario for the company's value if Cybertruck is successful and the new factory in China exceeds expectations. So wait a minute, I knew this had to be a trick. There had to be a caveat here. Okay, we're talking about Cybertruck. Cybertruck's not coming out for like 2+ years from now. What does Cybertruck have to do with any type of price target out there? And when you're talking about your best case scenario is for the stock to go to $500, it doesn't seem that dang bullish, especially if you're talking about this is like a multi-year price target or something like that, which it kind of makes sense if you're talking about Cybertruck because Cybertruck's not coming out for multi-years from now, okay? This is their quote. In an optimistic scenario, Morgan Stanley analyst Adam Jonas, who got thrown out of the Jonas Brothers, said he sees Tesla selling 100,000 Cybertrucks by the end of 2024. 2024! 100,000 by 2024? If they only do that number, I will call Cybertruck a complete disaster. Very recently on Financial Education 2, I think it was, I went through a video on my projections on what Cybertruck will do. And I can tell you, if they do only 100,000 total by 2024, that means the vehicle is a complete disaster. That means the billions of dollars of free advertising was not worth it. It literally, I can't even like comprehend that number. This is his best optimistic scenario, 100,000 by 2024 at an average price of $50,000. Additionally, Jonas believes Tesla's Gigafactory in China could perform better than anticipated and reach a production rate of 450,000 units per year by 2024-2025. And when he says 450,000 units per year, is he talking about just out of China? Because that would be very impressive numbers if those are just coming out of China. Or is he talking about the company as a whole? This would be kind of important to kind of figure out here, okay? Now, Tesla stock did rise a little less than 1% in after hours trading from the close of 330. Morgan Stanley's new bull case represents a 50% increase from Tesla's current stock price. Jonas is widely followed on Wall Street as he's one of the earliest bullish analysts on Tesla. This guy is bullish. This is the least bullish person I've ever heard of in my life. I think he's very bearish on the stock. And let's get a little deeper here, okay? As well as the market for electric vehicles. But Morgan Stanley's, quote, base case, okay, base case, price target of $250 a share remains unchanged, as well as its equal weight rating on Tesla. $250 a share base case. Last time I checked, Tesla stock's $330 right now, $250. That means you're bearish on the stock. You believe that stock is gonna go down over the next year to get to that $250. So I don't know why this is being called a bullish analyst or anything like that. This is the bearish of the bears of the bears. And I think if I was a bear on Tesla stock, I think I would be thrilled if Tesla stock went to $250 over the course of next year. I would be jumping for joy because I would be very scared that Tesla stock will be $500 at this time next year. So if it's at $250, $200, like if I was a bear, I'd be like, things must have went perfect for us, man, because this is awesome, okay? This is also their quote, okay? To be clear, we are not bullish on Tesla longer term, especially as over time, quote, we believe Tesla could be perceived by the market more and more like a traditional auto OEM. He says, we are prepared for a potential surge in sentiment through the first half of 20, but question the sustainability, Jonas said. So there we go. Finally, the truth reveals itself. They say flat out, they are not bullish on Tesla. They are negative on Tesla, and they're not for the Tesla mission. They obviously don't believe the company should be valued where it's at. They actually have a ridiculous price target for the bear case, okay? In essence, Morgan Stanley could see Tesla stock going in any direction. The firm has a $10 bear case. So this was the analyst that had that $10 bear case on Tesla stock. I knew I had to know this Jonas brother from somewhere, okay? That was the guy that made a name for himself on Wall Street last year when he slapped that silly $10 bear case price target on Tesla, which is basically saying Tesla is invaluable and the company's worth nothing and it's just a joke of a company, okay? If you can even call it a company at $10 a share, okay? He says, we continue to believe Tesla is fundamentally overvalued, but potentially strategically undervalued. In his latest report, Jonas reiterated that his base case represents the view that Tesla is not really a high-flying Silicon Valley tech stock anymore. He says, we are cautious on Tesla's prospects in China given geopolitical concerns. We believe that the Model Y will likely cannibalize a significant amount of demand for the Model 3 and see Berlin Gigafactory as the first step for Tesla to ultimately be seen by investors as an auto company rather than a high-growth tech firm with valuation reflecting that at some point. So let's be real clear about Adam Jonas, Morgan Stanley. They believe Tesla is somewhere between very overvalued as a stock and a stock that is completely worthless. That is really the truth around Morgan Stanley and this Adam Jonas guy. That's what they really believe is around Tesla, okay? Let's not confuse them for bulls. They are bears on Tesla stock, and it is clear as night and day. They just put that best case $500 price target just out there in case they are wrong so they can save their butts and they can say, well, you know, we did have that $500 price target for our best case scenario. They just want to be covered either way. Whether the stock goes bankrupt and it's a worthless company at $10, whether it kind of has a sad demise at $250 a share, or whether it goes up to $500 a share, they just want to cover every side. And this is what frustrates me so much about analysts, because they try to hide behind one thing and then say another thing and then try to get on all sides. It's like, are you bullish or are you bearish? Okay, and it's clear as day they're obviously in the bear camp, but they're just going to put that $500 price target out there on the best case scenario just in case it happens. Okay, so let's look at Tesla stock. So right now, here today, this is a company with about a $60 billion market cap on it. Now, Tesla in 2020 should do over $30 billion in revenue. So I want to jump on the whiteboard here and do a little math. Alrighty guys, let's do a little math around this Tesla stock, okay? So $60 billion is a valuation you're essentially paying for the whole Tesla company if you were to buy it here today, okay? Now, once again, this is a company that should do 30 billion plus, okay? 30 billion plus in revenues in 2020, okay? So that's a pretty big number there. In my opinion, they should at least double that up over the next 3 years after that, okay? Meaning they should essentially be doing $60 billion plus in revenues in 2023, okay? So here's the situation essentially here. In 2023, if they're doing, then they should be doing a minimum of $60 billion in revenue. Essentially, you're in a situation, because keep in mind, by that time, Berlin Gigafactory is going to be open. The China Gigafactory is going to be even more expanded. They'll probably even have another factory in the States. They'll have the Model Y, obviously, fully in the market, Model 3 in the market, and the Cybertruck all in the market by 2023, okay? So keep in mind, plus, you know, semi, roadster, other automobiles. They might even have some robo-taxis in the market. They might have a huge insurance product. Keep in mind, they're just testing the auto insurance product. That could continue to expand and become a massive category. So I think it's actually really, really easy to see a way on how Tesla's doing 60 billion plus in revenues in 2023, okay? So essentially, to make the valuation make sense, and this is assuming like the company didn't have any growth after that, which is completely ridiculous, but let's say the company was never expected to grow again. To make this valuation make sense, they basically are going to need $6 billion in net income on the bottom line, okay? That is very, very doable to have $6 billion in net income by 2023 if they're doing $60 billion plus dollars in revenues, okay, which they should easily be doing. But keep in mind, this valuation for Tesla wouldn't make sense. It's going to make sense for Tesla to continue to increase their valuation. Why is this? Well, Tesla can't be valued like they're Ford or GM or just some other player in the market that essentially has no growth going for them, okay? Tesla's a company that has massive growth ahead of them and has some unbelievably huge opportunities, okay? Businesses like the solar business, businesses like autonomous taxi networks, which will absolutely take off over the course of the next 5 years. And they will be a mainstream thing within 10 years, okay? And Tesla has a legit possibility to be the number 1 or number 2 player in this market, which in itself is $100 billion plus opportunity, okay? So when you start looking at all these things for Tesla, I think it's utterly ridiculous to say that the company should be valued like another auto OEM or something like that, because those companies are not Tesla. Those are the companies that are being disrupted, that are not innovating, that are seeing their business models become less and less relevant with each passing day. However, on the flip side, you have Tesla here, a business model that is continuing to disrupt industries and will continue to disrupt more and more industries over time. And you have a company here with Tesla that is completely focused on growth and growing their company and growing their top line, just like a lot of the great tech companies do, focused on growing that top line because they know the bottom line will come over time. And by the way, do you know one of the biggest profit engines for a lot of these, automobile manufacturers? A lot of them make a lot of money on service and selling parts. So, eventually cars get old, things break on those cars, okay? It's a lot of different parts and a lot of different things can go wrong with a car over time. Just little cosmetic things or big things like a car gets in a crash and it needs a whole bunch of new parts. It needs new doors, new windows, all those sorts of things, okay? And so those type of companies, they make a ton of money on their backlog of vehicles by selling service parts. And by the way, as Tesla gets more and more cars out there, guess what's going to happen? They're going to be able to make more and more money from things like service, okay? Things like the supercharger network that will continue to expand out. All these opportunities, there's so many growth levers for a company like Tesla that is utterly ridiculous to put them in the same category as a Ford, as a GM, or something like that. Because those companies are being massively disrupted and they don't have all these growth levers. Like Tesla's going to have like 50 different growth levers over the course of the next 10 years that they can grab from and end up, contributing to a very, very nice bottom line Things like, imagine you want to get like the full-scale autopilot on your car. It's a $7,000 upgrade, and it's mostly a software upgrade. Things like that are going to be unbelievably profitable for Tesla down the road, and they're just going to continue to innovate. They're going to continue to disrupt, and analysts like this, they're just silly. They want to throw a $10 price target on it and a $500 price target and say, hey man, either way we're covered. And it's like, it's clear as day these guys are bearish. They need to just, stick to their bear case. Don't even put out a $500 price target. It's ridiculous. We know where they believe the stock's going, and they need to stick by that. We don't want, they shouldn't be part of our party. When the stock goes where we believe it's going to go over time, I don't want these guys in our party, these guys from Morgan Stanley. I don't want Jonas' brother in this party. He doesn't belong anywhere near our party, okay? That's the bottom line. He's over there and we're over here, okay? And I don't want him taking credit both ways. If the stock goes down and it becomes irrelevant, which is completely ridiculous, but let's say that bear case happens, he can go have his party. But if the stock goes way up and everything transpires like we believe it will in the future, I don't want him part of my party. That's the bottom line there, guys. So hope you enjoyed this. As always, make sure you smash the thumbs up button and share this video with a Tesla fan out there or somebody that owns Tesla shares. Thank you for watching and have a great day.